Hi, this is Phil Hall of Mortgage News Network at the Mortgage Bankers Association's annual convention, and I'm joined by Rosie Biundo of Equifax, and we have a lot to talk about actually. Wanted to ask you a couple of questions about the Heloc market. There's been a lot of activity in terms of home equity. How is the industry responding to the return of equity to the housing market?
Yeah, great question. So there are a couple of different angles that they're looking at. One is acquisition, acquiring more customers from a Heloc or home equity loan perspective to make up for the shortfall in mortgages, and really using different data sources to do that, credit data, property data, to make sure they're making the right offers to those customers. The second piece is Heloc recasts or resets, and there, were Helocs that were originated about 10 years ago with looser credit standards and increased home values that are now scheduled to reset, which means that some borrowers are not going to be able to make that increased payment for those loans. So we're working on providing some insights to the industry, a Heloc white paper that will be released that will give lenders more insights into what to look for in their portfolio to segment risk, such as geography, a job tenure, and other predictors of risk. So we're excited about that.
Well, the refi market has pretty much evaporated, but the purchase market hasn't really come roaring back. Where do Helocs fit into this? Can they fill a gap until the purchase market finally gets its legs?
They can fill a gap. I don't think they're going to fill, the entire gap. What the purchase market needs, we need new home buyers. We need, first-time home buyers, which we haven't seen in quite some time. I think that's the only way we're going to see a rebound, and it's critical to the success of the industry.
I also understand that Equifax is doing something interesting in the realm of owner occupancy. Can you tell us a bit about that?
Sure. So with the purchase market comes more potential misrepresentation for occupancy status. We've released a product called Occupancy Advisor that provides an indicator of whether that property is owner-occupied or not. And that's important to note in the industry for a couple of reasons. One, occupancy is one of the top 4 areas of fraud or misrepresentation based on Fannie Mae statistics. And, people intentionally or unintentionally sometimes are really looking at ways that they can, have different underwriting standards. So for occupancy, for an investor property, the requirements are much stricter. So it's very important not only for the lender, but an MI or an investor to really know the status of that property to assess their risk. So I think we're going to see more of that, and our solution is going to provide some really good insights to help the market with that issue.
I would also think that something like this product would certainly help investors have more confidence in housing as well, because there had been so much fraud in the past in terms of owner occupancy issues.
That's absolutely right. I agree.
What do you see about the near-term future of housing? Where do you see the market going in the next 12 months?
So, I think right now what's top of mind for everyone is regulatory compliance. The forecast for mortgage originations is, it's contracting, the market's contracting. Lenders are really focused on compliance and regulation and implementing those policies and processes to really comply. They're also looking at cost. So how do they decrease cost at the same time that they're complying with regulatory? And it is a delicate balance, and I think it's a really tough spot to be at this point.
Well, Equifax is doing so much in terms of data-related products. Do you think that lenders today are more savvy when it comes to comprehending data and using it to their advantage?
I think it's getting better, and really there are a few advantages to the data that is available, and it's obviously compliance, quality loans that are being manufactured, and the other piece is customer experience. We're going to get to a point where a customer or home buyer is not going to want to provide 20, 30, 40 pages of information, pay stubs, W-2s. Lenders have access to that information, and with a borrower's consent, could source that directly from the source, so they don't have to verify. So I think that it's getting better, but there are definitely some opportunities.
Rosie Biundo, thanks so much for joining us today.
Thank you so much, Phil, for having me. I appreciate it.
This is Mortgage News Network.